What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So, a lot of you guys have really mentioned Starbucks stock. You guys wanted me to do a dividend stock analysis and a stock analysis. And, again, this is not financial advice for entertainment purposes, only disclaimer in the description. But this stock is very unique and it carries a lot of things to the table. Whether you're a day trader, you like puts, you like calls, you like traditional or Roth IRAs, or if you're a dividend investor, this stock is very unique and has a very extensive history. So I'm going to just do a review on these guys and show you their history and what their capabilities are in the future of these guys. So there's a lot of potential, and you're in good hands with this stock. So I'm going to go over that very quick and briefly. And I do have a big exam tomorrow, but I wanted to post this video for you guys tomorrow. Make sure you check out the video tomorrow. I'm going to discuss a monthly dividend stock that is getting on my nerves. I don't like it a lot, and I'm going to tell you why tomorrow. It actually is a really good real estate investment trust. Oops, did I say real estate investment trust? I'm already giving you a hint. And I'm going to discuss some thoughts, some pros and cons with that tomorrow. But I really want to discuss Starbucks and its capabilities. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button, and let's check this out right now. So here's Starbucks. It's sitting at $113.36. Has a dividend yield of 1.73%, a PE ratio of 32.00. Volume is 7.96 million. Its market cap is 130.51 billion US dollars. Its year range is 95.92 to 126.32. Day range is 11.71 to 11.14.17. Its previous close is 111 to 24. So here's the thing about these guys. If you look at them since inception, they have destroyed the S&P. In the past 5 years, they're a little bit down. Now, pandemic hit, they were beating the S&P, then the pandemic hit, then they're up, then they're down. So they're neck and neck with the S&P, which first of all makes these guys a very attractive traditional and Roth IRA stock, because my philosophy with it having a traditional or Roth IRA is, first of all, does it increase its price per share? How is it doing versus the S&P? So right there, this is the look test. This looks really good. And for day traders and people that do calls and puts, this is already a good thing because, again, people want to make a profit when they're day trading. People want to do calls and puts and make money off of that. And this is a very popular stock. And a lot of people do a lot of covered call options with these guys. So right there, it carries a lot of things to the table. There's a few other things that are very unique and really good about Starbucks, which I'll go over in just 1 second. But I just want to thank you guys for being amazing subscribers on this channel. So again, M1 Finance does have a special. So in my affiliate link in the comments section, you get $50. I get $50 if you sign up. So we both get $50 if you're interested in creating a dividend portfolio. So that's almost close to half of Starbucks stock. But let's check out some interesting information about Starbucks. Let's go. Now, the good thing about Starbucks is if you have this in a traditional Roth IRA or a dividend portfolio, this is on their website. They have an extensive stock split history, which is very attractive for people that are long-term dividend investors, like dividend growth stocks. And like stocks, if you threw it in your traditional Roth IRA, it's splitting. It has a history of splitting. Now, don't quote me on this, but they have some pretty good trends with splitting their stock, which make these guys very attractive. And once their price goes too high, who the heck's going to buy it? That's what happened with Apple stock. I mean, it hit like $400. I don't have $400 to start throwing in, shares. So that's what's happening. They're seeing an extensive stock split history, which make these guys attractive. Long term, this is already attractive as a dividend stock, traditional and Roth IRA. Your net asset value is going to increase. You're going to have a split history, you get more shares, and the dividends will increase, which I'll show you real quick. Look at this. 2010, it was 13 cents, then 17, Then 2013, it hit 21 cents. Then it hit 26 cents, then 32. Split 16, 20, 25, 30, 36, 41, 45, 49. So look at this. It has a really good dividend growth rate. Look at how fast that is each year. So it has an extensive dividend growth rate, which makes these guys a very attractive stock and dividend stock. So obviously, the more shares you have, the snowball effect kicks in. And that's one thing that's very attractive about Starbucks. Why many people own this stock as a dividend stock, why people like holding on to it in the long run. It appears to be a very good stock. And of course, during the pandemic, these guys did well. The recession, they did well. And the other thing about Starbucks, which makes them very interesting, I mean, I have their beans, like I'm literally looking at their beans. I bought their Christmas beans, but people go through the drive-through like crazy. I mean, all you have to do is brew your own coffee, and sometimes people like drinking the Starbucks cup because it's a status thing. It's they can brew their own coffee and buy stuff cheap. I got a deal on this, so I can't say no to that. But that's the thing, people are doing it for status. Like, do people really need a Tesla? No. They're doing it for status. And that's the thing about Starbucks. People drink the coffee for status. I got a deal on it, so I can't really say no to that. But and that's the thing about these guys as a company. It's just trendy. I don't see any coffee company as serious competition them. Dunkin', no. I see Starbucks a little bit stronger. Look at the lines at Starbucks. That's the other thing that makes them very powerful. And gosh, I got like a caffeine flushing effect from drinking that, studying for my final. And the thing is, they just keep on going. They just keep on going. They're like the Energizer Bunny. So they're splitting their stocks, they're increasing their price per share, their dividends are increasing. And I'm going to show you the revenue, which is phenomenal. So in 2015, this is in millions of US dollars, 19,162, 21, 22, 24, 26. Took a little bit of a hit in 2020. You can play the pandemic card. I mean, people are being real tight on money and they're being a little frugal. Now look at this jump, 23 to 29,000. So that is a lot of money that they're generating. And again, this is in millions of US dollars. So these guys are jumping up in revenue. They're increasing their dividend. Their price per share is going up. People do calls and stuff all the time. Starbucks is always in the news with a lot of Fox Business, MSNBC Business, Kramer. They all talk about this stock, so it must be doing something good. When stocks get a lot of attention, like Apple stock or Pfizer stock, that's usually a good thing. And Pfizer is so cheap right now, so it's one of my favorite pharmaceutical dividend stocks. But that's the beauty of Starbucks. So if you guys are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Again, I'm going to be posting a video tomorrow about my monthly dividend rate. I am not happy about, and I'm thinking about selling it next year so I don't have to bite the bullet with capital gains taxes for this year. So make sure you hit that notification bell so you don't miss future videos. And if you're new, again, be a subscriber and let me know what you think of Starbucks. So you guys take care and have a good one.